Hello and welcome again to Money Tips. This is Charles Kelly bringing you money tips to help you save, earn, invest, accumulate and enjoy more money. If I haven't said it before, very Merry Christmas to you. I hope you've all had a great Christmas and are looking forward to a prosperous and happy new year. And I had a nice Christmas myself. It was a sunny day in London, in fact. Actually a beautiful sunny day yesterday, although cold obviously. But it was a really nice day, and yeah, it was a great Christmas. Now, today in the UK is a holiday. It's a public holiday, commonly known as Boxing Day. St Stephen's Day, I think, is another word for it. But it's although most people are off work, the shops were thronging with people for the sales today, and this is the traditional time when the prices in the shops are slashed. Although personally, I feel that stock is brought in for the sale and the real stuff is not really reduced in price. But more and more people are now shopping online, so the shops have had to slash prices even further to attract people through the door. And in fact, some hedge fund managers are betting against high street retailers in the light of increasing online shopping. And everywhere you look before Christmas was just Amazon vans everywhere, white vans, Amazon vans, and all sorts of vans delivering stuff. And rushing around delivering stuff before Christmas. And even the retailers are doing partly business from online orders. Like today I ordered something online but went to the store to pick it up at Argos. So, you know, I think stores have got to adapt and learn from this. Now, what is the main title of what I want to talk about today is the UK economy. Now, most reports that I've read in the last year are predicting doom and gloom. In fact, they've been predicting doom and gloom since the vote in 2016. And, you know, since then, they've been predicting that Britain's economy will go down. And it hasn't really happened. Yeah, there's been some bumps along the way. There's been some turmoil. We've lost David Cameron. Then we had Theresa May. Now we've got Boris Johnson. But we've got three prime ministers in 4 years. So it's quite amazing. It's unprecedented. But Boris Johnson convincingly won with a strong majority in the election on the 12th of December. And, you know, I think that speaks volumes for the fact that people have voted in favour of Brexit, because they wouldn't be voting Boris in the north, in places where they've never voted Conservative, if they didn't want Brexit. So all these reports, as I said, are predicting doom and gloom, and they're saying there's going to be a bumpy ride. If we go out without a deal, it will affect the economy and all the rest of it. But a new report has come out, which is surprisingly upbeat about the state of the economy. And it's from the Centre for Economics and Business Research, the CEBR, and has said that Britain's economy will remain a dominant global economy after Brexit, and long-term forecasts show that the UK will continue to pull away from France as Europe's second largest economy after Germany. And the Centre for Economics and Business Research said that despite Brexit, the French economy has failed to overtake the UK in the 3 years since the EU referendum, and that Britain's output should be a quarter larger than the French economy by 2034. These are the projections for this study. And the UK continues to benefit from a young population, spurred on by young people coming into the country, young immigration, and performance in the technological and pharmaceutical and creative industries. However, it ceased to be the world's fifth largest economy after in 2019. In fact, this happened after India raced past as now the fifth largest economy in the world. So the largest economy in the world is still the US. And the report also says that the US has confounded its critics because, you know, only 2 or 3 years ago they said that China was catching up with the US and would probably overtake the US. But that hasn't happened. And the US has in fact gone a little bit ahead and China has slowed. So the US economy is racing ahead. Has this got anything to do with Donald Trump? I don't know. But despite this trade war, the US economy is going ahead, is racing ahead, and China is slowing down. Then you've got number 3 is Japan. Now, I remember when they said Japan was going to dominate the world. This is in the 80s when Japan seemed to be buying everything and doing everything, and they said they would dominate the world, and it didn't quite happen. Their economy stagnated. And I think China's worldwide spending spree could come to an end. I'm sort of a little bit suspicious about what China really has got, because it's a closed economy. Then fourth is Germany, which is still the largest economy in Europe and the fourth largest in the world. Then we have India, number 5, who are racing ahead. UK number 6, France 7, Italy 8, and Brazil 9, and Canada 10. And Australia is moving up the ladder to number 13. Now, what they're saying is that Australia and Canada has benefited from highly skilled immigration, which is what the UK needs as well. And this is why Boris Johnson is setting up a new points-based immigration system to attract the brightest and the best from all over the world. And I think they really need to rejig that and make it easier for the brightest and the best to come here and gain settlement further down the line without too much trouble. I think we've taken a step back, and we're not attracting the best, as many of the best students that we should be, and as many of the bright immigrants that we need to grow the economy here. Now, the other thing to remember is that Boris Johnson will be spending money. I think whichever government came into power would have spent a lot of money, and Boris Johnson wants to invest in the north of England and invest in infrastructure, so that will automatically boost the economy. And once the government starts spending money, it trickles down, doesn't it? Because they don't do everything themselves. They haven't got their own builders and their own engineers. They use private businesses and partnerships, and then they employ people, and the people they employ then go out and spend money in their local economy, and they use subcontractors. They use all sorts of small firms, and it automatically boosts the economy and boosts economic activity. So that's good news. There was two reports out saying that house prices would grow by 2% next year on average, although those and this is from a 1% to 2% last year, 1% last year to 2% in the next year. But these reports come from lenders who've pretty much got a vested interest in the property market. So I think 2% is probably about right, but I wouldn't get too excited. Buying a house still depends on affordability, and in London and the southeast, people can't afford to buy a house when the house costs 14 times the average salary. So it's still very difficult for first-time buyers to get in on the market, and until the lenders start to readjust to a world of low interest rates instead of basing their lending criteria on 5 and 6% when people can get a mortgage of 2%. I think until then it's going to be difficult for people to buy. And also we still have large amounts of personal debt. We still have problems in the world with the fallout from the last economic crash. So personally I wouldn't get too excited by these reports, but I think that this report does illustrate that Britain does have a bright future in a post-Brexit era, in a post-EU era, and can probably do things without so much EU interference and red tape and protectionism. In fact, Donald Trump has gone on record and saying that the trade between the UK and America could grow by 4 or 5 times the current level, and that's because we're not in the EU. However, the deal that Boris is struck with the EU, if that goes through, then it could restrict us in many ways, and perhaps by doing our own trade deals. So the details of that need to be ironed out. But now that Boris has got a strong majority in Parliament, I think he can go back to the EU and renegotiate a new deal. So for those of you who invest in unit trusts and funds around the world, you ought to have a look at that report and see that the leading economy is still America, still growing, and it's still a good place to invest if you invest in shares. The Berkshire Hathaway guy, Warren Buffett, once said that you shouldn't bet against America, and perhaps he's right. Whereas if you go into funds that say invest in China, then there's not so much regulation there, is there, as there is in the UK and America. And the UK economy is set to grow, so that's a good place to invest as well. But let's. I'm not giving you investment advice. As always, you need to take your own advice. You need to see your own advisors and make your own decisions, because I'm not your financial advisor. So there you go. So I hope you've had a great day today, and I'll be speaking to you again, and we'll be looking back on some of the events that's happened in the last year, and looking forward to how we move forward into the new year, which will be next week. So thanks for listening. This is Charles Kelly, bringing you money tips to help you save, earn, invest, accumulate, and enjoy more money. I'm the author of a book called Yes, Money Can Buy You Happiness, and I worked in banking, insurance, and with my own brokerage for over 25 years. So I was actually an independent financial advisor, and so that's where I get my background in money and money tips. My money tip over Christmas was: don't spend money that you haven't got. Don't take expensive credit to buy consumer things like clothes and flat screen TVs and games consoles, because those things will go down in value, whilst the value of your debt will go up, and you'll be paying huge amounts of interest in the future. So thanks for listening. One other thing is that if you're going abroad and you're in you are in the UK and you're going abroad, your travel money should on average buy you 11% more than it did not so long ago, because the pound has sort of bounced back compared to this time last year. So thanks for listening, and have a great day. Thank you.